the idea is that a lot of traders here in the U.S. thought that these tariffs on Swiss goods wouldn't be applied to gold because you need to trade 400-ounce bars for central banks, 100-ounce bars for the COMEX, and kilo bars in Asia. Apparently, there are going to be tariffs on those gold bars.
Exactly. That's what they thought. They had plans, and then they got a letter. I have the letter here. So basically, maybe just one step back, Switzerland has a big trading surplus with the United States. It's not because of chocolate, not because of watches, or really anything else. It's because of gold. Switzerland, as you said in your intro, is a main refining hub. So it comes over from London, from Uzbekistan, from wherever, and then it's being shipped to the US market, mainly to back future contracts, right? And the idea was, this is exempted from tariffs. A gold refiner from Switzerland sent a letter to the US Customs Office and wanted to get clarification on it. And, so I'm having this letter in front of me, you know, it talks about gold bars. The gold kilobar is rectangular in shape, 115 millimeters in length and 50 millimeters of thickness, you know, that kind of stuff. And then they clarified the tax code, which is now 71081355500. That is a tax code for gold bars, which are being shipped to the United States, and they fall under the 39% tariffs for Switzerland.
Right.
And that's also true, by the way, for all the other countries.
Yeah, and it's just dizzying to think through the implications of this. You think about even central bank reserves. This would touch really a lot of different areas. But what's interesting to me is that there was some pull forward here. This specific letter that you have in your hand is a surprise. But you think about U.S. monthly gold imports surging to a high of 43 tons in January this year alone. The average monthly production by gold refiners in the U.S. is 22 tons, according to last year's average. So there was some anticipation that maybe something was coming. Yes.
I mean, the immediate consequence is, it's a small industry at the end of the day, for instance, here in Switzerland. Shipments are on hold now, right? So US producers or refiners, they need to get, the raw material from somewhere else, and prices in the US are rising, while there's a massive arbitrage opportunity or situation, while prices in Europe are lower. So I feel like people are now trying to find out what the fallout from this is going to be and how they can replace those shipments. The only thing I can tell you from a European perspective right now is that all shipments are on hold. So basically there's no trading of gold bars between the Atlantic. So yeah, I guess that we can call that a massive disruption to global gold trade. And then I don't know what the implications for central banks will be, but there should be implications.